Something's happening with SoFi stock and it's louder than ever. This isn't just about better than expected earnings, it's about a full-blown shift in how Wall Street is starting to view SoFi, not just as a digital bank, but as a future-facing fintech ecosystem. Yet even with the rally, the warning signs are real. The billion-dollar share offering, diverging analyst calls, and execution risk on new products like crypto and AI. So here's the big question, is SoFi headed for a massive breakout or a sharp correction that wipes out recent gains? You're about to find out. Also, don't forget to hit subscribe. We're going deep into the numbers, the narratives, and the critical signals you won't hear elsewhere. SoFi's second quarter earnings didn't just beat expectations, they shifted the tone. Revenue surged 44% to $858.2 million. While net income reached $97.3 million. That's a massive leap for a company that not long ago was still chasing profitability. EBITDA jumped 81% to $249.1 million, pulling margin up to nearly 30%. This marked SoFi's 7th straight profitable quarter, with GAAP EPS landing at 8 cents, 2 cents above the consensus estimate. But there's more here than just headline numbers. Membership surged by another 850,000 in the quarter, bringing total members to over 11.7 million. Product adoption jumped by 1.26 million across lending, investing, and spending tools. These aren't just vanity metrics, they signal deeper engagement and long-term platform stickiness. And here's where things really tilt bullish. SoFi raised full-year revenue guidance to $3.38 billion and expects $370 million in net income. Those figures, if met, would represent a massive re-rating opportunity. But they also raised the stakes. If third quarter or fourth quarter show any cracks in delivery, this rally may stall just as quickly as it began. Right now, Wall Street can't seem to agree on where SoFi's headed next. Mizuho came out swinging, lifting their price target to $26, citing strong user growth and confidence in SoFi's fintech expansion. Needham raised theirs to $25 and praised the crypto integration strategy and SoFi's deepening tech stack. But not everyone is sold. TD Cowen's target lingers around $22. Barclays and Deutsche Bank both sit at $21, offering cautious optimism at best. They like the growth, but they're still watching for consistency before leaning all in. That spread, $21 to $26, is a wide one, and it tells you something important. SoFi's future isn't about what just happened, it's about what happens next. Guidance might be raised, but if the execution doesn't show up fast and clean, those upper targets fade. So while the bulls are excited, the bears aren't going away quietly. Shortly after posting blowout earnings, SoFi dropped a surprise, a $1.5 billion share offering, roughly 5% of its total outstanding shares. The deal included a 15% greenshoe option, giving underwriters more firepower to stabilize pricing. This isn't a small move. That kind of dilution raises eyebrows, especially when it comes just after a sharp run-up, and pricing the offering at $20.85 below the recent trading range added pressure on shares. But here's the other side. This cash is not just sitting idle. SoFi plans to use it for scaling their tech stack, pushing crypto product development, exploring blockchain-backed lending models, and potentially expanding their AI capabilities across customer service and personalization. So is this a smart reinvestment in future growth or a momentum killer that signals insiders are cashing in? That's the key tension traders are watching now. This isn't just about second quarter, it's about how all the puzzle pieces come together heading into the second half of 2025. And the next few moves SoFi makes could either send this stock to new highs or drag it back into uncertainty. What happens in the next earnings call will determine how far this rally can run. Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool, one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. It's the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. Let's talk about the real wildcard here, product execution. SoFi is betting on being more than a neobank. The reintroduction of crypto trading has opened the door again for Bitcoin and Ethereum access on their app, with plans to expand into stablecoins and crypto-backed remittances by the end of the year. More importantly, with SoFi's full banking charter, they can now integrate crypto into broader financial services. That means checking accounts that can auto-convert, remittances that bypass international fees, and smart contracts that simplify lending. On the AI front, SoFi has teased features that could revolutionize personal finance. Think automated budgeting based on behavior, real-time credit improvement suggestions, and predictive tools for borrowers and investors. If they deliver, this positions SoFi not just as another player, but as a category leader. But execution here is everything. Fail to launch or botch the rollout, and these future bets turn into liabilities. From a technical standpoint, SoFi looks strong. Relative strength index is hovering near 98. That's a red-hot level. Accumulation is climbing, and options volume has surged, hinting that institutional eyes are back on the stock. Short interest has started to ease, suggesting bears may be covering quietly. But that's a double-edged sword. When a stock rides high on momentum, it becomes vulnerable to sharp pullbacks. And with a fresh batch of shares hitting the market and some price targets already in reach, any hiccup in sentiment could trigger a fast reversal. So while the chart looks bullish, it's only as strong as the news flow supporting it. Now let's zero in on the most important event in the immediate future, the next earnings report. Here's what analysts and investors will be watching most closely. First, will SoFi hold to its new full-year guidance or walk it back slightly if third quarter looks softer? Second, has the crypto relaunch actually generated meaningful volume? Third, how is the $1.5 billion raise being put to work, and will that spending translate into real growth signals? Also, keep an eye on commentary around regulations. Crypto oversight is tightening. AI is entering policy conversations. If SoFi isn't proactive in addressing compliance and risk management, they may get outpaced by more conservative fintechs. This report could either extend the rally or kill it in its tracks. SoFi right now is a test case in execution. They have strong earnings, they have product expansion, they have analyst attention, and now they have a war chest of cash to accelerate it all. But markets aren't always fair. They react fast, punish hard, and reward only sustained performance. So if you're watching this thinking about whether SoFi is a buy or not, focus less on what's already happened and more on what happens next. Because one thing's clear. If SoFi nails its execution, this stock could run beyond even the most bullish targets. But if the momentum loses fuel, the fall could be just as steep. Thanks for watching.